So what's going on with AT&T? What's going on, team? It's Ricky with TechBud Solutions, and that's a question that one of our LPP members asked this morning. George Cruz with the just great question. How many of you guys noticed that AT&T just took a huge dip today, right? And the question might be like, why? The reason that I'm talking about this is if we go on the 4-hour time frame, you can zoom on out and see that AT&T was just at 180-day highs. It was at highs of nearly $34, and it has recently pulled on back. I know that you guys love when I talk about stocks that are recently oversold. Like we've said before, just because they've sold off and just because they're oversold does not make them a good buy right now. Why? Because they can continue to sell off, and please make sure that you take that into consideration before aggressively buying the dip. But I did want to share my plan with you guys today. You guys know that I love being able to take advantage of decent deals in a very tasteful way. So why is AT&T, or ticker symbol T, selling off today? Well, there was a report that AT&T is going to be cutting off dividends, and it's an effort to clean off and kind of get back to the basics is what, based off of the number of articles that I've read. Please do your own and further analysis on AT&T yourself as well. But pretty much they are trying to clean up their balance sheet, and in a way, in doing so, they think that this is better for the longevity of the company. They also set up a new partnership with Discovery, an effort to try to compete with like Netflix and Disney, but to utilize all that capital, and how they're going to be able to like clean up their balance sheet is like being able to cut out their dividends or cut their dividends in half. So make sure you look a little bit more into it. Obviously, a lot of long-term investors, AT&T was a very popular stock. And again, I'm sorry for using the term, but for boomers, right? And because it had such a high paying dividend, right? But now as they're cutting it in half and ultimately just really removing it, now it kind of it brings up the question of like, is this something that, without that dividend incentive, something that people still want to hold on to? And that's a question for you to answer, right? Depending on your intention, depending on your criteria, it's up to you if this is something that you personally want to partake in. But one of the things that I find very attractive about AT&T is I shared my little game plan with the people that are part of LPP. The ticker symbol is T, support 28, resistance 33, desired entry at an average of 30.50 and exit of 32.50. Stop loss or reduced position at 27.50. And why it has potential? Let's just keep it real. Because buying the dip after bad news and the risk to reward ratio. So if we go on over here to our drawing to and from where it's at right now to the overall upside, you can see that it has nearly 15% potential for profit in comparison to what it has for downside, obviously much less. Like we've said before, as of right now, it is still selling off. This is very recent news, right? So it wouldn't really be much of a surprise that if not only the market continues to sell off, but if this news gets even worse, it could only drive the selling pressure even further south, right, for AT&T. I just thought I would talk about it as it's a blue chip stock. It's a quality company. It's unfortunate news for current investors, but for people like you and I that are not already invested in AT&T or ticker symbol T, and that view this to be a decent deal, then again, because it's been so bullish and because it's been performing so well, this provides us with a decent opportunity for those that see it as that. And I just thought I'd talk about it. My game plan, which is what a lot of our LPP members were asking, is it's all about position size, right? At least right now, because we don't know if AT&T is going to continue to sell off. So how is it that I'm going to approach AT&T? It's going to be very similar to my other positions that, I'm not trading lower cap stocks. I'm really trying to put my money in companies that I see value in and that I view to be decent deals, right? These are a lot of the companies and the current value of those specific companies that I'm currently invested in. You can see that they range anywhere from nearly 900,000. I actually sold 100 shares of Tesla today. So I still hold 1,500 shares, and I plan to add more once it continues to indicate signs of an uptrend. But right now, Tesla isn't performing too bad. It's at $5.90 a share. It's up 2.4%. I just know Tesla's bound to pull back a little bit, and I want to have enough buying power, right? But when it comes down to stocks like Netflix, Pinterest, and Twitter, I'm invested with 20%. And what does that mean, Ricky? You have $20,000 or $18,000, $17,000, $19,000. What does that mean? Well, I plan to invest a total of $100,000 into each one of these companies. AT&T is potentially one of those new companies, but instead of going in at $100,000 all in right now, buying the dip, aggressive, and hoping for the best, right? What am I going to do? I'm going to buy in with $10,000 at the current price point we're at right now, right around $29. And the reason in doing so is if it continues to sell off, my dollar amount invested is so minute that I won't hesitate to manage my risk, reduce position, or ultimately cut losses, right? And the dollar amount at risk is much less, especially as we don't have confirmation of a reversal. But if AT&T begins to indicate signs of an uptrend, I'll begin to load up on it. Once it actually begins to indicate signs of a recovery, then of course, right? It's like we all know, it's much easier to make money in the market when the direction is in your favor. That's all I want. I want the direction to be in my favor, and with more confidence and more clear direction, I'd be more happy to invest or more heavily invest into AT&T. That's simple. So in retrospect, right, I have $100,000 that I plan to invest in when it comes down to AT&T. If you have $10,000 or if you have $1,000 in your investing account, right, it's all relative in the sense of if it's $1,000 that you have, then a 10% position size would be $100. Put yourself in a position to succeed. And that's for any stock it is that you see value in. How many times? You can answer this question yourself. How many times have you bought in the dip on something and you wish, looking back, you would have just waited a little bit, or if you would have just bought less of it because it continued to sell off, you would have been less emotional as it sold off, right? You put yourself in a position in which you can tolerate. Don't take an aggressive position if you can't tolerate a pullback. Don't buy in early if you can't tolerate a pullback. Don't buy at all, right? Before confirmation if you can't tolerate a pullback. That simple, right? So I'm excited to follow up with Tesla. One of the things that I did want to share with you is, Tesla is trying to find a support right around 570, 560 a share, as you can see based off previous support levels. Tesla has so much to prove. I don't even really want to talk about this one too much right now. It needs to break above $600. I want to see it break above SMA, and we'll follow up with it then, right? What I want to talk about is how many of you guys have been paying attention to the NASDAQ market, right? And if you go on over here and it's IXIC, you can look a little bit closer and see that right now we are at a critical point. We're at the SMA line. What used to act as a support level, this SMA line, is now acting as a potential resistance level. It's very simple. So we might get rejected here, or we might break above. It is at a critical point where if we begin to see that it begins to break above SMA line, that's a step in the right direction, and that's exciting. That's when I will take an additional 10% and invest in the different companies that I'm currently invested in, as that's a step in the right direction. But if we get rejected, we got to be prepared, and we got to be prepared for potential pullback. I'm probably going to leave all my positions the same except for my Tesla position, and I'll reduce it a little bit just so I have enough buying power at the lower levels to be able to take advantage of those good deals. So I just wanted to update you guys on my current positions. Today is a great day. Yesterday, I updated you guys on my red day, right? I trade with a dollar amount that's a little bit greater than the average person. So yesterday, I was down at one point over $20,000. If you guys follow me on Instagram, I ended the day at like $16,000 of a loss. But again, these are positions that I'm holding. I just like updating you guys on the day today so you know that you're not alone on both your green days and your red days. Today is obviously an amazing recovery, up $27,000. This is very similar to my day on Friday when I was up over $25,000. So all I ever want to encourage you to do is to only put yourself in a position in which you can tolerate, and as well as never be afraid to lock in those profits, right, when the time is right. So I really do appreciate you guys' time. Continue working hard, continue following dreams, let your passion be what drives your success. Don't forget to stay subscribed to the YouTube channel. I upload new videos every single day, and if you're wanting to stay connected, we do have a free Facebook group with over 312,000 members, and that's that first link in the description. If you want to watch me trade live as soon as tomorrow, that's that second link in the description, and we'll see you tomorrow at Market Open for our live trading session. Until then, like always, let's make sure that we end the year on a green note. Take it easy, team.